you have to see it as it's not as big as it looks. I think everything is about numbers. Don't let the numbers impress you, right? I think it's always the same principle. You have to know your numbers. You have to know what you're trying to accomplish when buying. And I think if you already have a property, then you should use that property. If you have some equity built in, to buy something bigger, definitely. And once you get into those bigger properties, it doesn't impress you anymore, right? You'll be able to scale pretty rapidly from there. That's probably my advice, and do it as fast as possible. Also, I know there's a lot of people that they get into analysis paralysis. Let me read more books. Let me get more information. But the best learning you get is from doing things. So take action, definitely.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today I'm very pleased to have Noé St-Gerard, who's a Quebec-based real estate investor. How's it going, Noé?
I'm great. How are you, Axel?
I'm doing good. So I'm quite excited for our conversation. We met at the third Real Estate Effect dinner. Thank you again for attending. We had a lot of fun that evening. We ended up sitting side by side and chatting a little bit about your experience, and thought it would be a really good idea to bring you on the show, because I'm sure your experience is going to inspire other people, as you've been quite creative and gone quite a long way. So, before we get into it, I just want to remind everyone, thank you for listening. Thank you for supporting us. Please share this show and episode with someone who you think could benefit from this conversation. And please like, subscribe, and send us some feedback. So there you go. All right, Noé, it's always one of my favorite questions, but how in the world did you start to invest in real estate?
To make a long story short, I would say when I was a kid, probably 10, 11 years old, my parents bought a first property that went up in value pretty quickly. And from that property, they were able to buy a 8-unit building. So from that 8-unit building, I was probably 10, 11 years old, and I kind of saw my quality of life change. I would say that's kind of what gave me the love. But also, they weren't good with computers. So every letter to tenants, if I had to follow up on who paid and who didn't pay, I was the one typing that up on the computer, printing it and giving it to them so they could give to their tenants. So that's kind of how it started for me.
Okay, so from a very early age, you were thrown into the action and you used your skill set to be able to give some help to your parents. That's very kind of you, and it's also a great way to learn.
Yeah. I don't think they gave me a choice, but it was a great way to learn and we did the property visits on Saturdays, so it was great. Yeah.
Nice. Okay, so then you obviously didn't sign your first mortgage at the age of 8 or 9 years old. So I guess a little bit later on, you decided to go off on your own. What did that look like?
Yeah. So basically, when I was 19, I started a property management company. That was by myself, and then I at the same time I was working at Desjardins as a credit analyst, and then later on as a mortgage specialist. So I actually started doing mortgages for other people as well. That also gave me a lot of knowledge. And a year after starting as a mortgage specialist, that's when I bought my first property, a 5-unit building.
Oh, wow. Okay, so you did start at a very early age. And was that first property here in the Montreal region?
Yeah, Montreal, Rosemont, very close to the stadium, actually, on the east side.
Oh, nice. Okay. So you started, you said it was a 5-unit?
Yeah, 5-unit building.
Okay. And do you still currently own that property?
Yeah, still currently own it. It's for sale right now, actually.
Oh, okay. Well, if someone's interested, hook up with Noé. It might be a good way to find a buyer.
Yeah, I already have an offer on the table, so maybe that'll we'll have to wait. But yeah, we'll see how it works out.
Okay. So then again, like you started from a very early age, you were in your early 20s. What happened next? How did you start scaling?
Then I started doing a lot of Airbnb, right? So my strategy was in the other buildings that I was managing, I started Airbnbs, and in that building that I bought, I also had 2 Airbnbs out of 5 apartments. So that kind of created some cash flow for me. I was also doing other businesses at the time. I had a car garage. And then later on, what I did is I moved to New York. I moved to the United States, and I started wholesaling. So wholesaling is when you find off-market properties for other investors. So that also helped me get more knowledge of the U.S. market and also created some cash flow for me. From there, I was able to buy a 12-unit building last year during COVID.
Okay. And was this 12 unit here in Montreal again?
Yeah, here in Montreal, actually, same area, very very close to the stadium on the east side.
Okay. Okay, very nice. And you said you lived in the US at some point. I guess you went over there for work?
Actually, no, I went over there for real estate. So I had friends that were doing real estate over there, and I went over there to do a flip. So I did a quick flip over there in Jamaica, Queens.
Okay. Okay.
Yeah, it went terrible, but it was a good experience.
Okay, I love it when it goes terrible because that's when we learn the most. So, okay, what happened? What went terrible there?
So basically, we bought the property at auction. We bought it for very cheap, so we were very happy. But when you buy a property at auction, what happens is you know the address, you know the area, but you don't know what's the situation inside of the property. So what had happened was there was somebody that lived in the property. The actual owner of the property died, and there was somebody in the property living in there that was actually a tenant before, but she stayed in there for 10 more years, and she paid the taxes and everything. So it wasn't on the radar of the foreclosure or anything like that yet. But something happened at some point, and then basically they decided to take back the property. We didn't know that, but she had a huge emotional attachment to the property. And in New York, it's very hard to evict people, even if they don't have any rights to the property. So it was 7 months of court, a lot of lawyer fees, and even when we finally evicted her, she went back into the house. And then that day, it was in July 2018. It took 10 hours to take her out, and it was she threatened to basically put the whole house on fire. So they blocked the whole street, did a perimeter. There was probably 20 cop cars. Bomb squad came, firefighters, and we stood there on the street for 10 hours until they evicted her.
Oh my God. Yeah. Okay. I could see why you say it went terribly wrong. Okay. So then eventually you were still able to gain access to the property. I suspect it needed a lot of renovations.
Yeah, definitely a lot of renovation. It was very disgusting. The state of the property was terrible. We were still able to renovate it and sell it and make a very small profit, but the amount of time that was lost it was incredible. And the profit that we ended up making at the end was just enough to basically to break even, if we could say that.
Mm-hmm. Okay, so did that turn you off from flips?
Yeah, definitely. I mean, I wasn't a flipper before that. It's just an opportunity that came. But yeah, definitely flips is not my thing.
No. But for some reason you kept investing in the US. I understand now you have a bit of a portfolio in the Atlanta region.
No, so I'm looking to buy the first properties in the Atlanta. So
Okay.
I'm looking at a 66 units right now, under contract, and we're looking to close probably in October.
Okay. You said it's a 66 unit?
Yeah, 66 units, pretty big building, right next to downtown Atlanta.
Oh, nice. Okay. Can you tell us a little bit more about that deal? Like, how did that happen?
So basically, that was from when I was in New York. I was doing a lot of wholesaling. So I stumbled onto this property when I was looking at the Atlanta. I was starting to look into Atlanta, and there was this one guy who had this house that I was interested in. And he told me, he's not sure if he wants to sell the house or not. He had a son, and he doesn't know if the son wants to take over the business or not. His son was in school at the time. So I kept following up with him about every 6 months, just calling. And then recently, I would say about probably 6 months ago, I saw that house that I was interested in was sold. He sold it. But that man had the 66 unit, and he had a bunch of other properties in that area as well. So he was telling me also about the 66 units, so I knew about it. And then when I saw that he sold that house that I initially was calling him about, I called him again, and I was like, okay, so now that you sold that house, it's looking like you're looking to sell more of your things, because he was, older. It told me that his son wasn't interested in taking over the business, the fact that he sold that house. So I called him, and I was like, okay, are you interested in selling some of your other houses and properties? And he said, yes, the 66 units would be next. I was like, okay, cool. I'm interested in that.
Nice. That's some of the best deals, or by following up. I had heard someone that said, like, I'll either buy or follow up till you die.
Yeah, that's the way to go about it. Definitely. I mean, it's so rare that you get a deal off the first call. It's usually always in the follow-up.
Yeah. Yeah. And so can we talk a little bit about this deal? Like, I'm interested in the US, like roughly, like you don't have to be exactly specific in the prices or whatever you're comfortable with, but like, what is it looking like on a price per door? And you said you're closing in the early fall. What are the next steps that you have to do to fulfill that?
So first step would be probably raising capital. I don't have all the money to take on that deal by myself, or maybe if I have a lender that's able to give me a little bit more than 80% LTV. We'll see. We'll see what happens with that. Price per door would be around 140K per door. I can
Okay,
give specific details because we're still
of course.
negotiating and there's a couple of things still going on. Um, yeah, I'm pretty confident about the deal. We have to go through inspection also still. That hasn't been done yet. So that's basically what we're in the process of figuring out, and
Mhm.
then we'll have some more negotiations. And it's a pretty big deal, so there's a lot of moving parts for sure.
Yeah. It is, and it's also that you're doing this at a distance, and that definitely adds a layer of complication. You know, I suspect you don't go there every weekend to push things further down. So have you built a little bit of a team down there?
Yeah, yeah. So I have an engineer, I have a contractor. So those are two guys, and I have a couple of friends also connections that can always check on the property for me. But I would say I'm on the flight probably every 6 weeks. So every 6 weeks I'm in the States.
Mhm.
I'm People who follow me on Instagram see that I'm on the flights very often. So I would say I'm there probably every month or so.
Okay. Yeah, and as the closing comes closer and closer, you're gonna have to make that trip even more frequently.
Yeah, yeah, definitely.
And so, just out of curiosity, what attracted you specifically to the Atlanta market?
I think Atlanta is very because there's a lot of dynamics. We were talking about it, but so the way Atlanta is set up is you have the downtown core, and then you have kind of like those neighborhoods that are a little bit more difficult, are right outside of downtown, and further out you have the suburbs where more comfortable people live. But the thing with our generation is that everybody is trying to move closer to downtown, so these areas all around downtown are being gentrified at a pretty rapid pace. And we also have the belt line that's accelerating that process. The belt line is kind of like like a system, a transportation system that's going all through those neighborhoods around the city of Atlanta, right? So you have to think of it kind of like a crown. You have the downtown in the middle, and then right around that you have kind of like poor areas, and then you have the suburbs, and everybody's moving in closer to downtown. And at the same time, downtown is also expanding outwards. So all these areas are gentrifying extremely fast.
Mhm.
So that's really what attracted me to the city. And then we have very good numbers. It's affordable. There's a lot of people moving in as well, and there's a lot of employment opportunities also in Atlanta.
Yeah, there's a few big employers over there. I always think of Coca-Cola.
Yeah, yeah. People don't know that, but there's a lot of Fortune 1000 companies over in Atlanta. I think it's probably top 10 as a city with the most Fortune 100, 1000 headquarters over there. And it's a pretty small city, so that's very impressive.
Yeah, yeah. Wow, that's a great transaction that you're sitting on right now. Congratulations. I mean, obviously, like there's still a lot of steps for you to close, and sometimes it's we want to celebrate, but until you've gone to the notary and signed on that dotted line, it's not finished yet.
Yep, it's not done yet. Still have some work to do.
Okay. So if we backtrack a little bit, you've been investing for now quite a while and did a few types of transactions. And I'm curious in your mindset because I remember when we were talking at the dinner, I was actually quite impressed by the vision that you had. And just a simple question like, what do you think is making you so successful right now investing in real estate?
Um, Definitely, I would say the vision. I would say I know exactly where I want to go. I know the potential I have, and I also just learning a lot. Right, I have a lot of knowledge. I love meeting new people. I love reading a lot of books, and all I do is study the market every single day. So those are the things that really motivate me, and I think the hunger for it really to be
Mhm,
successful is one of the big things.
mhm. And do you foresee in the future that you'll just want to keep investing in the US, or are you still looking to do some transactions here in Canada?
We'll see, but definitely want to focus on the U.S. I think there's a lot more population. There's a lot more opportunity. There's market inefficiencies also. And one of the things that's amazing about the US is the 1031 exchange, right?
Yeah.
So the fact that you can move on from a property to another without paying taxes in between, that makes your growth a lot better. The compounding effect is a lot more powerful when you don't pay taxes between each transaction.
For sure. If you
So
don't
Montreal will always be home, so I might always keep investing here also.
Yeah, and you still have already a few buildings, so you can let these babies grow, and eventually they'll multiply.
Yep, exactly. They're multiplying right now, so it's, Montreal is treating me good. I think it's a very good market as well.
Mm-hmm. And so again, like for people that are listening, that are looking to invest or that have started, they might have a duplex or triplex, and they want to scale. What would be some advice that you would give them in order to achieve that? Because for some of them, it seems like a daunting task.
Yeah, I mean, you have to see it as it's not as big as it looks. I think everything is about numbers. Don't let the numbers impress you, right? I think it's always the same principle. You have to know your numbers. You have to know what you're trying to accomplish when buying. And I think if you already have a property, then you should use that property. If you have some equity built in, to buy something bigger, definitely. And once you get into those bigger properties, it doesn't impress you anymore, right? You'll be able to scale pretty rapidly from there. That's probably my advice, and do it as fast as possible also. I know there's a lot of people that, they get into analysis paralysis. Let me read more books, let me get more information, but the best learning you get is from doing things. So take action, definitely.
100%. 100%. I couldn't agree more. Like, get into the action. And we all know people around us that have been reading books and listening to podcasts and researching for years, but they've never made a single offer. And they're convinced they want to invest and they're serious about it, but yet they've never been able to pull the trigger. I find it's a great pity. And as you said, like, get into the action, make some mistakes. It's okay. Have your first transaction kind of go sideways. It'll be the best learning experience you can have.
Absolutely. Definitely.
Mm-hmm. Now we are going into a little bit of a turbulent times right now. As we all know, interest rates are increasing. Financing isn't as easy as it was in the last couple of years. Kind of how are you preparing for this new era that's coming ahead of us?
Man, that's a very good question. I think just what I'm doing now is, for all of my deals, I want bigger margins. I want to be on the safer side of things. I think there's a lot of things that we don't know. We don't know what's going to happen in a year or 2 years, right? We don't have a crystal ball. I have a little bit of an idea, but I just want to be on the safer side, right? So a little bit less leverage if possible, and on the deals, I want better margins. I'm not doing any type of bidding wars right now. I'm not doing any bidding wars on any properties right now.
No, you're absolutely right. And actually, people have been so used in the last 2 years that they had to overbid and they had to remove some of the conditions. And now they have to remind themselves that we're going back towards a more balanced market. And, prices are going to stabilize and maybe decrease a little bit. And it's normal to put all those conditions back and be a little bit more picky and a little bit more demanding in the way you structure your offers, to really make sure that you try to push this down to the maximum and not overpay at a moment where the market is stabilizing.
Exactly. Yeah.
Mm-hmm. Yeah. And it's quite, I don't know for you, but I'm going through several files right now on the financing, and it's not easy. It's not as, I was going to say, fast as what it was, 6 months or a year ago. So yeah, it's definitely, the tide has turned.
Yeah. Oh yeah. You can feel it. In real estate, it's always a bit slower than in other asset classes, but you definitely feel a change. Even the sellers are starting to feel it. Us investors are definitely seeing it, right? So it's coming, and I think, as you said, prices are probably going to stabilize or decrease. I'm thinking in Canada, there's a good chance that it might decrease. It might decrease a bit, just because we have, as opposed to the US, we have terms, right? So we have a lot of people that will be forced to refinance at higher rates, much higher rates. Some people, if you bought in 2018 or 2017, I was doing mortgages in 2017. So if you got a 5-year fix in 2017, you probably had a 2.3, anywhere between 2.3 and 2.7. Now you might have to refinance at something like 5.3 or 6%, because we have an increase coming on July 13, right?
Mm-hmm.
So 3 times the interest rate, and you probably paid mostly interest and no capital pay down in the past 5 years. So that mortgage is going to be looking much more expensive than when you first bought your property. So that's something to look to be very careful about.
It's funny you say that because that's one of the situations that I'm going to be facing next year in 2023. I'm going to have to renew a mortgage, and I know like it's going to be exactly what you described. So now, luckily, that property is performing very well in terms of rents, and there's plenty enough juice to pay for it. But yeah, the margin is definitely gonna shrink.
Right? It's gonna take a little bit hit on the cash flow, but it's a lot of people are saying it's gonna crash, it's gonna be a recession, but I also think it's gonna be a great opportunity to buy also, because
Yeah.
when those prices stabilize, the rates are not gonna stay high for forever, right? And when those rates come back to normal, let's say around 3%, then everybody who bought, let's say at 6%, that bought a good deal at 6%, when those rates go down, they'll see a pretty good increase in value in their property as well.
Hmm. Absolutely. And, as you said that, it made me think of Warren Buffett's famous quote of be fearful when others are greedy and greedy when others are fearful. So we all know that in the next couple of months, couple of years, there's definitely going to be some opportunities as some people are scared.
Definitely, yeah, and they're right to be scared. There's a lot of people that are going to be surprised at what happens next. But I think if you have solid, kind of like a solid investment thesis, you know what you're trying to do, and you're able to withstand, you're gonna come out a winner out of this situation. The people that keep buying and that are not scared are gonna come up big winners out of this situation. So it's not all doom and gloom. There's some bright sides if you know what you're doing.
Yeah. Yeah. And it always goes back to researching your market, educating yourself. And that's something that you've been doing a lot of, and giving you that confidence to be able to withstand those moments. So congrats to you, man.
Definitely, thank you a lot.
Yeah.
Congrats to you as well. I love what you're doing.
Well, thank you. It's appreciated. And this whole podcast started just exactly to have conversations like, I was going to say everyday investors like you and me. We're not coming out of, I was going to say, real estate Ivy League school. We just started this way. We did a few transactions and it worked out, and we want to keep pushing ahead. So, as we're getting towards the end here, would you have any words of wisdom to share with our listeners when it comes to investing?
Definitely, I would say the same thing that I always say. You want to make sure you have the knowledge, and then you want to make sure you know your numbers, and then you want to take action. Those are the 3 steps. Keep it very, very, very simple, and you'll win.
Yeah, always true. You're absolutely right, man. And finally, where can if some are interested to reach out to you, follow you, where can they find out more about you?
It's Bird Real Estate. So you can find me on Instagram mostly. It's probably the easiest way to reach me. It's on Instagram, or by email at noah@levelupproperiesgroup.com. So that's my email and my Instagram, Bird Real Estate. Those are 2 easiest ways you can get a hold of me.
Perfect. Sounds good. We'll make sure to put it in the show notes. And again, to anyone listening, reach out to Noah if you have any questions, any comments. I'm sure he'll take the time to answer you and to see how he may be able to help you.
Definitely. I answer to everybody. So, you can hit me up at any time. Always happy to help.
Sounds good, man. Thanks I love the energy. Thank you very much. Thank you very much for coming on the show today. It's been a real pleasure. And to everyone listening, again, you heard it today. Keep researching your market, make some offers when you're confident in the numbers, and it's okay. A lot of them will fail, but all it takes is one good one to erase all those negative ones and all the time that you've invested into it. So get into the action, be serious. Thank you very much, and we'll talk next week. Bye-bye.